It's been a while since my last analysis of the US housing market. In fact, a full 3 years, preceded by my original 3-year trend forecast covering the period from November 2012 to early 2016. That forecast a strong bull market against expectations at the time and for several subsequent years. For it's forgotten today that in the aftermath of the financial crisis, the prevailing view was that the US housing market was dead for a generation. And this is not from the usual perma-doom merchants. I don't like to name names, but you know who they are. But was the consensus view at the time. So before we plunge into this series of analysis towards a concluding trend forecast, it's good to understand the reasons why the consensus led by academics usually tend to find themselves on the wrong side of major market trends. Where even the king of the US housing market data, Professor Robert Shiller, continued to warn not just against high housing market valuations, but also for stocks, a bull market which he neither saw coming and has remained on the wrong side for a good 5 years at least. So what do academics such as Robert Shiller repeatedly miss? They miss the significance of momentum and sentiment on trend, which is accumulative, as I've covered many times over the years. So momentum and sentiment plays an important part in determining a trend forecast for US house prices. First, a recap of my original forecast for US house prices covering the period November 2012 to early 2016. As a reminder that at the time of publication of my forecast, highly vocal commentators such as Peter Schiff were strongly bearish on the outlook for US housing market, as illustrated by his video of January 2013. And as far as I can see, remained consistently bearish for the duration of the subsequent bull market. Whilst my in-depth analysis and concluding trend forecast was also published as one of my first Market Oracle videos during January 2013. Therefore, my forecast conclusion is for the embryonic bull market of 2012 to morph into a real terms bull market of 2013, where each year builds on the preceding year's momentum all the way towards an average price gain of over 30% by 2016. This translates into a precise forecast for the Case-Shiller CXSR index to rise from the most recently released data of 158.8 released in December 2012 for October 2012 to target a rise to 207 by early 2016, or a gain of 30.4%. There are several potential ways to play the unfolding housing bull market, the lowest risk of which is to buy a house to live in. The next risk would be to buy to let as a landlord, and the highest risk being to buy bank and house builder stocks, which tend to be highly leveraged to house prices. And here's how the US house prices trend forecast concluded early 2016, resulting in only a 2.5% deviation against the forecast trend, so proving remarkably accurate as had my preceding forecast during the bear market. Whilst my last interim analysis of the US housing market in March 2016, ahead of a planned for in-depth analysis that remained pending, concluded in expectations for a continuation of the bull market for a gain of 5% for that year. and despite the prevailing doom at the time and expectations for Fed starting to hike interest rates, concluded in a 4.4% gain in US house prices. And that was my last forecast for the US housing market, which brings us to the present, the current state, where despite all of the mainstream media noise and the usual perma-doom mantra, the US housing bull market has continued to rage on and upwards all the way to new all-time highs. The last bull market peaked at 226.3 for June 2006 data, which is set against the most recent peak of 227.5 for October 2018 data. Take note of this, folks. All of those highly vocal fools who have bet against this bull market for its duration, who even today continue to do so. I don't like naming names, but do check out before you buy into their highly polished and convincing perma-doom sales mantra. The US housing bull market is now into its 8th year. Now, whilst I've been a while since I last looked at the US housing market, however, that does not mean I'm starting from a blank slate, for my extensive ongoing US housing market analysis equally applies to the US housing market, albeit with differing numbers and skewed outcomes. So the conclusion of this outlook should continue to prove reliable at least 2 years forward. And do remember to subscribe to this YouTube channel for the next video in this 9-part housing market analysis series that will conclude in a detailed trend forecast. However, the whole of this analysis, including the trend forecast, has first been made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month.